Hi guys, it's Ted here, and I just wanted to take a few minutes to talk about Gentex, which I think is an undervalued auto parts supplier right now. Its stock price has been increasing pretty substantially, I guess, over the past couple of weeks or so, since the overall market correction brought it down, as well as many other companies. So I just want to show you Gentex here. Let's go to the Guru Focus page that shows, first thing that I notice all of a sudden with a company like this is a lot of green, which generally is positive. So you see in the profitability and growth section here, which I always like to look at, a lot of green, not only in comparison to its own history, operating margin, net margins, return on equity, all that kind of stuff, positive, even against its own history, like historically for its, in comparison to its own metrics in the past, but also compared to its own industry, so other part suppliers that it competes with. So this does take a lot more research. You should probably look into this a lot more. Gentex produces a lot of like auto dimming mirrors. It's getting into headlights. It produces aftermarket rear view mirrors, like the kind you can replace with the little cameras in them. It produces a lot of sensors, lane departure sensors and stuff like that. One thing I thought that was pretty exciting is it's starting to get more and more into aircraft auto dimming windows. So in the Boeing 787 Dreamliner, you don't just pull the shade down to block out the sun, I guess. They actually have auto dimming glass in there that's produced by Gentex, which is really cool. So that kind of stuff, I mean, it's not a low barrier to entry to get into that kind of industry. So that allows Gentex to hold healthy margins, especially when you compare it to any other, a lot of other companies in the auto sector, where margins are just very tight. So it's profitable, and it's got cash flow, very positive free cash flow, net income, all that kind of stuff is all very green in the bottom section here, the financials. And so valuation, I mean, there are a few different ways to look at this, but right at the top here, you can see the discounted cash flow models are showing that this company is quite undervalued. And with that, you have to be careful, because it obviously depends completely on what the inputs are, and a lot of assumptions are made by this website, by Guru Focus, which are usually okay, but you still have to go in and verify what kind of a growth rate is it assuming, and what earnings has it used. Earnings have been thrown out of whack in some cases, just because of the recent tax cut, and so that you want to make sure those numbers are accurate going into it. And then, of course, you have to decide for yourself, do you think this growth rate is realistic for the next 10 years? Because that's what this calculation uses. And is there a healthy enough margin of safety? Because you don't have to be perfectly accurate when you're trying to predict the future growth. You should be close enough, and your margin of safety should be wide enough that it's okay to be a little bit wrong, and you're okay if something happens in the marketplace that disrupts the industry a little bit. And then, of course, you obviously choose a business that is secure enough with its own market. And Gentex, I feel, is one of those companies. You can't just come in and start replacing those components that Gentex has put a lot of research into, and holds a lot of patents for these products, which in my opinion, and also Morningstar, the moat rating is a narrow moat rating because of these patents that it holds primarily. So anyway, I think a growth rate of 18.9%, I mean, that's a pretty substantial growth rate, but it is based on the past 10 years. So maybe that's an okay growth rate to assume. You can bring this down if you think it's going to be a slower growth rate. But technology, I mean, every new car that you look at these days, it's being packed with all kinds of new sensors and technology, and there's a lot of potential for dimming glass to be used in all kinds of other ways too, not just in vehicles and in mirrors and those kinds of things. You can use it in everything. So there's a lot of potential there, but you don't want to get caught up in speculating where growth is going to come from in the future. Just look at what it's done, and this company is growing at a healthy rate and should probably do so for years to come. So anyways, if you follow the discounted cash flow model, it does appear to be substantially undervalued. You can even add the tangible book value here because it holds no debt, and there's a positive tangible book value to this company. So a margin of safety of greater than 50% is not very easy to come by for a good quality company like Gentex. And maybe you would have been better off buying it a couple of weeks ago at $18 a share or around that point. But anyway, this is a good one to hold for years. I think it's a pretty undervalued company. So anyways, I hope you found that helpful. Please feel free to comment if you have any questions or comments. I'll post the link to Guru Focus below. And if you want to check it out for yourself, I highly recommend it. I use it every day. I spend a lot of time in Guru Focus doing all my research. So all right, have a great day. Bye for now.